Ladies and gentlemen, she is, sometimes she's known as the deal dynamo, but she's absolutely incredible. She's a managing partner at Quattro Capital. She heads client relations. She's a chiropractor. She's a doctor. And, she owned a bunch of wellness centers and then transitioned into real estate investing, started with single family and now multifamily, absolutely killing it. She's energetic, super approachable, super inspiring. And if you didn't miss round one with our celebrity guest, in the middle of July, man, please check out that recording. But it's amazing because she helps others achieve financial freedom, and she gives back, right? She's a mother of 5, a grandmother of 2, an avid marathon runner, and she travels to countries like Belize and Haiti to build orphanages and support local communities. So, ladies and gentlemen, without further ado, let's give a big Freedom Chasers welcome again. Welcome back, Dr. Erin Hudson. Let's go.
Hey, it's so good to be back here with y'all.
Let's go.
Thanks for tuning in on a Sunday night when you can be with family and friends and all the things, right? So
that's right.
To be here. I'm excited. And
that's right.
I'm going to say it again. You heard me before. If your camera's off, there's nothing that I would love more than your camera being on and giving me some of the Zoom clap, which is this for some reminders for those that weren't there last time. It's our Zoom clap. If you hear something really good or a nugget gets dropped, you can go like this for money, or you can go, wow, that was money. Just some reminders for y'all. So I'd love for you guys to take part and let's have a conversation together. I'm super excited for tonight. And how many of you did not hear last time I spoke? Raise your hand if you didn't hear. Did you not hear? Oh my gosh, you got to go back.
Yeah.
I don't know what happened. It was more than my Wheaties I had. I seriously felt like, I don't know, it was as if I had 20 pounds of sugar or something, because I was flying high on our last call and I felt like I dropped so many great nuggets that are absolutely applicable for you guys, right?
Mm-hmm.
So if you have a moment, go ahead and go back, listen to that. And here's the secret. I feel like I speak so much that I wanted to make sure for you guys, I wanted to make sure that I didn't bore you and I didn't try and bring back a story or share something that I shared last time. So you know what I did? I actually went back and listened to it and I put it at 1.75 speed, just so I can make sure that I don't waste your time and I really make sure I bring something nice and fresh and new. So y'all could do the same. If you don't have a lot of time, turn it up to 1.75 and thank your Erin Hudson for giving you a reminder to do it that way.
That's incredible. That's incredible. I mean, a celebrity guest that actually does some homework right before going on to make sure she maximizes the amount of value, that she brings to the table. Unbelievable. Erin, you never cease to amaze. I have to say that. And, you were so fire last time. I mean, we kind of put you on the spot towards the end. We're like, we got to figure out how to squeeze her in as soon as possible for round 2, because your story was so amazing, how you got started, the inspiration. And we didn't even really get a chance to talk to funds, which was the original reason why we wanted to bring you on. So that's why we had to do round 2 to dive more specifically into funds. And glad to have you back.
So glad. Listen, I'm going to just control my mouth and I'm going to answer shorter because I want to make sure that we get through a lot, because there's so much goodness that I still have to share with y'all.
But you filled the time so good, Erin. You didn't waste any time. I just want to reiterate that. You didn't waste any time. And you know what? Worst case, we do a part 3.
I love it. But I have to tell you guys, I'm going to give you guys some kudos real quick and then we'll get started. I love, love, love that value that you guys brought to me. Guys, these guys sent me back, not just the recording of it. They had their team break out like 20 clips for me. And guess what? Those 20 clips are going to be, they're going to be power and fire that I add on my social media just to remind people of the nuggets of some of those things that I dropped. So kudos to you guys for delivering on your end. That's absolute honor for sure.
Thank you, Erin.
Happy to do so.
Definitely. Well, Erin, since we did have quite a few people actually that raised their hands that said they weren't here the last time, and it was Father's Day, right? So a little bit challenging for people to make it, but we want the super abridged Cliff Notes version, but because you're a person that's so personable, we got to know a little bit about who is Erin Hudson, abridged version, and then we'll dive into funds if that's okay.
Yeah, perfect. I'll fire away. So bear with us, guys, those that were on last time, but I'll just make it short and sweet. I'm a mom of 5 beautiful kids, as they shared, and 2 grandbabies. And I came from being in private practice as a doctor. I was tired of paying Uncle Sam 50 cents of every dollar. And when I found out the goodness of real estate and even more exceptional multifamily, it was an absolute no-brainer for all the tax deductions. And guess what? I no longer pay 50 cents of every dollar to Uncle Sam. It's maybe 10 cents to every dollar that I pay Uncle Sam, if that. And that could be a discussion for later that I'd love to share more with you about that. And from there, it was this. The likelihood of my kids becoming doctors was minute, but the likelihood of me being able to create generational wealth, leaving a legacy, giving them the tools to equip them so that they could tune in, buy real estate, build an empire, make money while they sleep, pay little in tax. Do you get what I'm saying? Do I need to keep going?
Come on.
So much goodness that comes from multifamily. This crazy chick left from being a doctor. And guess what? Everybody has one of these people in their life. Nancy, I love your smile. The 2 of you guys are just like laughing it up. I need some of you guys. But listen, how many of you guys have family members or friends that are like totally like shaming you and thinking that you're a fool and what an idiot you are? Like, imagine for a moment, I was that chick. I was a doctor. I had 30 employees. I had 2 wellness centers in Southern California. And guess what I did? I literally took a massive pay cut, packed up my bags, and I left. And I beat it and went to Texas. And I took a massive pay cut to leave a profession that was paying wonderful money. I was tired of the taxes. And I could go for so long on this, but here's the thing. Everybody said, you're a fool. You're a doctor. You're in private practice. You have other doctors that come in and work in your wellness centers. What they didn't understand is that just because I was in solo practice doesn't mean that I was in control of my financial future. Why? Because at the end of the day, the healthcare system, all they got to do is rip that carpet out from underneath me, and they start to give lower reimbursements and tell me what I'm worthy to be paid as a doctor. To hell with that. Now I create my own destiny because I'm the one that gets up every day grinding to do well, not for myself, not just for my family, but for people like you guys. Impact the masses. And now I'm going to buy big so I can give big. And that's what I'm on a mission to do. When we talk about other people and leaving an impact, that's what I'm all about. So I will shut up, but now you have it. I'm on fire. I'm doing big things. And I like to hang out with the players because guess what, guys? I need you there because guess what? It's very lonely at the top. So come play with me.
Let's go, man. Do you feel the fire? Do you feel it? I see some face. I see Fred. Look, Fred looks excited already. I see it. Where are the hands, Fred? Come on.
Thanks, Fred. Thanks for the love.
I love it, man. This is what it's about here. Activation, right? So without further ado, Trevor, I say we're gonna dive right into funds, right? Erin, what is it, right? Funds. We talk about funds. You spoke with you the first. To us, you were Mrs. Fund. You know, we could feel it. You were instantly wanted energy to jump onto us. You need to do it. You need to go, right? So tell the audience here, fun.
How many of you are actually looking to get in the space of multifamily? Because like we have investors, you want to be a passive investor. And then we have others that are like, no, I want to get in the game and I want to find a way to play in the space. How many are in that like are looking to play in the space more than just being a passive investor because you're really wealthy and you just want to grow your bucks? Like how many want to, okay, cool. So check this out, guys. I'm going to give the gold right now, like massive, massive gold. Here's what I'm going to tell you. If I were to do it all over again, and as a reminder, since some of you were not on the last call, I was the chick that got into the space and it took me 18 months before I took down my first property. Holy smokes, guys. What if I could show you how to speed that learning curve up and get you in the game like yesterday versus taking 18 months and taking the slow train like I did? Would you want that? Give me like a thumbs up or a Zoom wave or something exciting. Awesome. Very, very cool. Sorry, my dogs were barking. So listen, here's the thing. Is it took me 18 months because I was the chick that had to try and wear the hat to call the brokers, find the money, find the deal. Can anybody relate? Like, raise your hand if you're like, man, I kind of feel like that. I feel like I'm just overwhelmed. I got a lot going on and I don't have partners and I don't know what to do. Guys, I'm going to solve your problem tonight if you want to move in this different direction. Now, we all know that there's two things that are of utmost importance when you're buying an apartment building and you're in the space. How many would agree with me? It's finding the deal and finding the money. Yes?
Agreed.
It is. Okay, well, I'm going to speak to those. I want to know how many out there are the ones that are looking like maybe I want to find the money. Who wants to be the money, the capital raiser, that person? I just need to see who's out there. Okay. Who's looking to find the deal? Okay, check it. This might help both camps. What if there was a way for you not to have to wear all the hats that I just talked about? What if there was something called, how many of you know about a fund and what a fund is? Yes, no? Thumbs up if you know a fund. Listen, I'm so sorry. We have to have a 10-second break. Trevor and Marcel, take the wheel. I got to let my dog out because he's barking. I'm so sorry.
Trevor tells everybody what's a fund.
Yeah, well, I mean, we were at Fun Lunch Live, right, Marcel? That's where we met Erin. And basically, you can think of the water in a pool as like the capital in a fund, and the water gets funneled out into different investment opportunities, right? So the pool, the encased pool with the water in it, that's the fund with the capital inside, and then it gets allocated to different investments.
Okay, I missed what he said, but I can pause if you wanted to talk. Otherwise, I'll fire away.
Yeah, let's hear your definition of a fund, Erin. I
Okay.
did my best, but yours is probably 10 times better.
Okay, so check it out. So a fund, basically, let's just pretend that for tonight, for all sakes here, we're going to say that you guys are all fund managers. Okay. A fund manager is somebody that literally has access to deal flow and perhaps working with another company like Quattro Capital. So if you are a fund manager, you have now created this fund where you could go talk to all of your friends, your family, and say, hey, I've got a pretty incredible opportunity for you to be a part of. Well, hold on a second. You're not the one that's finding, as a fund manager, you are not the one that is finding the deal. You're not the one that's doing all the due diligence to figure out whether that deal makes sense or not to even put it under contract, okay? That is what the job, I'm going to use Quattro Capital for tonight. Quattro Capital found the deal. Now, I'm going to share with you first, we're going to rewind for a moment. Sorry to confuse you, but we're going to rewind for a second because I think I'm going to set this up and you'll understand it better. Quattro Capital came with our 5 partners, and let's just say in 2021, we closed on 17 properties together, okay? And with that being said, we never had any capital raisers. We would find all the money ourselves with all of our friends, family, et cetera, et cetera. Together, my partner and I, who are head of the equity relations, have raised $80 million. Awesome, right? Hold on, Zoom clap, Zoom clap. So it's not our first rodeo, right? So there's all these other people that are wanting to come and raise money for us. They ask us every day, all day. We will not have capital raisers come join forces with us because the SEC does not allow it unless they have their series license, okay? We are making such massive moves with Quattro Capital that we do not want, it's a fine line, and we are not looking to get in trouble with the SEC, okay? Now, we said, holy smokes, everybody's going to agree here. What's going to happen in the next 2 years? We know there is going to be mass deal flow. Does everyone agree on that? Are we about to have mass deal flow in the next 2 years? Why? Because there's so many people in trouble. They're going to get caught with their pants down. Their monthly new payment for their apartment building has gone up because the interest rates. Cost of goods went up. So therefore, they couldn't finish their capital expenditures of the rehab that they were going to do on these units. Therefore, now they can't get the rent bumps and now they can't service the debt. Is everyone following? Wave your hand. Yes. Want to make sure we're all on the same page.
Erin, I would say repeat that one more time. That was a little technical, just to make sure everybody grasped it.
Okay. Guys, it's okay if you don't grasp it. I'm a little bit slow myself. Sometimes it takes me a few times too. So don't feel like you can't raise your hand and re-ask. Okay, so what is happening in the market right now is we all know interest rates have gone up massively, right? And if interest rates go up, then that means that now the monthly payment for that apartment building that you own has now gone up as well. It's risen, okay? When you buy an apartment building, most people will have a business plan, and the business plan is to do what? It's to increase the income, increase the rents, right? And decrease the expenses and increase that bottom line. In order to get the increase on the rent, you have to go in and do a little bit of cosmetic work, right? You can't just expect that you're going to come in and raise the rent. Sometimes you can. That's called loss to lease, that you can come in and raise the rent because the current owners, maybe they've owned it for 25 years and their rent is super low. And now we're going to bring it back up to market. Okay. That's called loss to lease. Okay. And then in addition, when you rehab a unit, if we put $15,000 a door into a unit, we're going to hope to get at least $150 to $200 rent bump per month. Okay. On that unit. So didn't want to belabor it, but understand if the cost of goods goes up and you cannot put that into your unit to do your rehab, and all of a sudden your debt, your monthly payment you're paying has increased, you got a problem. And many operators are going to be in trouble right now because they can no longer service their debt. So what does that mean? It means there's going to be really good deals that are going to have to be sold. And guess what? Quattro's leaning in and we're ready to take down. Okay. Now you're like, okay, well, where do we come into play? Well, here we go. So I got talking to my team and I said, listen, I know we've raised in-house and we're not taking capital raisers. What if we brought in fund managers? And they're like, well, tell me more, Erin. Well, look, there's a lot of people that are out there that are raising $5 million, $10 million. And what do? The fund manager comes in. Stay with me for a minute. I know it sounds overwhelming, but I'm going to put it in a very what if there was a way for you to get started being totally at an entry level? Okay. Stay with me. So that $5 million, that fund manager that's got $5 million comes to Quattro and says, hey, Quattro, I'll bring $5 million. I know you need 10 million for your deal. I love you guys so much. I've watched you guys. You've got a proven track record. You were able to net your investors last year on 5-year deals, 34% average annual return year over year. I've seen your track record. Yeah, well, thanks. I appreciate that. Listen, I want to take $5 million and put it with Quattro. Okay, fantastic. Where did the $5 million come from? He's a fund manager. Okay. He went to all of his people that know him, like him, trust him, that know that he's in the apartment space, know that he works with very strong operators and has really good deals put in front of him. That's what happens, guys. A fund manager gets really great deals put in front of them. Okay. Just pause for a second. Is everybody okay? Like, yes, we're good. Can I keep going? Is anybody lost? Here's your chance. Speak up. I want to clear the air. I want to make sure you guys are understanding so far where I'm at. Marcel, Trevor, you watching? Is everyone good?
Everyone is extremely excited for you to continue to crush it.
Okay, cool. Thank you, Marcel. I love you. Okay, so check this out. There's a lot of people in our space right now, you guys, that are trying to break in and they're overwhelmed. They felt the way I felt for 18 months before I took down my first deal. So what if we could help you guys to go for the lowest hanging fruit? And that's what I'm going to show you right now. What if you could come in as a fund manager and you say, hey, Erin, I've seen you in Quattro. I want to come in as a fund manager, but I'm going to be honest with you. I can't do $5 million. Okay, Fred, what can you do? And Fred goes, oh man, I feel pretty confident. I've got 10 buddies. They know me. They like me. They trust me. They know I'm in this space. And I know without a shadow of a doubt, if I got into a deal and I went to them, I know that they would come and want to link arms with me. I said, Fred, well, guess what? What if there was a way for you to work with a high performance team like Quattro Capital? You want to hear it? And Fred says, what? What does Fred say?
I'm all ears. Fred's all ears.
All ears. That's right. Okay, so check this out. So here's the deal. I tell my team this, you guys. I said, to hell with all the big people, all the big fund managers. What if we could help the little guys? what if we could help all those people that are trying to break into the space, but they don't even know how because they don't have a strong team. They don't have anyone that they know, like, and trust. And they're a little bit terrified because their people's money is super important and they want to make sure that they're investing with top-notch people. Okay. So the Quattro team says, well, Erin, I love where you're going with this. And I said, listen, if we help the underdog and they bring $1 million on their first deal with us, what happens on the next deal? All of a sudden it's a snowball and now they just brought 2 million. But hold on, now they come to the third deal and they've brought 3 million. Okay. Understand something. This is a way for you to get in as an entry. You still can be looking for deals. You still could be looking for partners. It may be the lowest hanging fruit for you to be able to get in a deal. Okay. I'm going to share 3 things that are of utmost importance. You guys can take notes, write it down. Most people that start a fund, it will cost them between $25,000 and $35,000 to get an attorney to put their fund in place. Does everyone hear me loud and clear with this? Because it's very important. You're going to get excited with what I'm about to share next. So that is just solely to create their fund. So I said, team Quattro, guys, I've got a really big idea. It's really grandiose. And they're like, well, what? I was like, what if we could help with the third-party administration side? So all of these newbies, they're not intimidated going, well, what the hell how do I set up a fund and all the administrative side? Like, I don't even know what to do. Well, so what if we could take all the pain out of that and make it super simplistic so they pretty much can't even say no? They're like, please sign me up. So the team goes, well, what does that look like, Erin? I said, here's the 3 most important things. You guys can write this down. The first is we've got to get an attorney that's going to take Team Quattro's PPM, which is the private placement memorandum, and we've got to get it labeled and their logo on there and let them create their own PPM with just some subtle changes in there, but put their company logo on it. Yeah, okay. So you need an attorney, number 1. Number 2 is you need to have a CPA that's going to file taxes for your fund, send out your K-1s, and do your bookkeeping. Everybody hear me, right? Number 2 is that CPA side. So they're going to take care of that whole thing. The third thing that you're going to need is an investor portal. Has everyone on here been to somebody's investor portal before? Does everyone know what I'm talking about? Raise your hand if you do. An investor portal. Okay, cool. I'm going to tell you anyways for those that are too shy to put their face on. Y'all are good looking that are showing your face, by the way. So check this out. On an investor portal, that is where you would send Fred's going to send his buddy Bob, and Bob's going to come to Fred's investor portal. What's your company name, Fred? Oh, is he not able to come off mute?
We'll
get him off mute to share that.
There you go.
Hey, it's Meg Equity Partners.
Okay, Meg Equity Partners. So people come to his portal and they see Meg Equity Partners and they're like, dang, dude, this guy's a big freaking deal. He's no joke. All that has happened is basically Quattro Capital's portal is almost like evergreened, and it's created for Meg Equity Partners. It's got the private placement memorandum. It's got the beautiful property that they're going to invest in, all the pictures, all the little tidbits and highlights of the property, what makes it so juicy. It basically is a duplication of Quattro's. Everybody with me so far? So then my next thing is, well, look, if we got all these newbies, none of them are going to have buku bucks to go spend a ton of money to have those 3 components, right? Because you guys can already imagine, right? I already told you an attorney's like $25,000 to $35,000 to do your fund, right? Everybody, yes. Number 2, all of a sudden we have a CPA, you got to file taxes and bookkeeper and K-1s. Oh gosh, that's a whole lot of money. And then you have the investor portal, a few more $1,000s, right? A little overwhelming and a little off-putting for somebody that's new. So I said, what if we set up these 3 and we literally have them and we create this box, a beautiful box with a pretty bow on it. Hold on. And how many of you have done a paint by numbers? Who's done a paint by numbers? Raise your hand. Come on, kindergarten, paint by numbers. All the 4s get painted green. What if we did the same thing for you, right? And you didn't have to try and figure it out because you don't know. So check this out. Guess how much it is for our attorney to create your PPM docs that I just got finished telling you that are $25,000 to $35,000. Guess how much, guys? from an attorney. Somebody just put your hand up. What do you think it is? 10, 20. What do you think it is? Let's hear. All right. Wow. Rosa, you win. Caleb, you win. Marcel, $5,000 we've negotiated. So I went to all of these different companies. I went to our attorneys. I went to all of our attorney. I went to our investor portal. I went to our CPA and I said, we'd really like to use you. Can you take care of our people that would love to get in the game? You guys have got to make the price point so juicy and so good so that my people can't say no. Let's help these people out, because the truth of the matter is if you help them get their start, like we're helping them get their start, that's just the beginning. They'll become lifers for you and they're only going to roll out to do bigger and better and bolder things, right? So check it out. 5,000 for the attorney. What do you think we got for the CPA? Hurry up. Just anybody put it out. 1, 2, 3, 4, 5, 6, 7, 10. 5. Victor, you win. $5,000 for the attorney. For the CPA to do K1s, do your taxes for your fund and bookkeeping monthly. Are we kidding? All right. And then the last one is the portal, $5,000. So I just am showing you a way to get in the game with a $15,000 price tag versus who knows what it'd be if you went and fetched it out in other places. Why is this super important? Hang with me for a moment. It gets even better. I feel like, what is that? Home shopping network, whatever. On TV. I want you to
QVC.
for a moment. Thank you. QVC. I'm feeling like a QVC girl. I probably could use some tips though. Okay. So check this out. If you create your own fund, you're like, well, what's in it for me? How in the world am I going to make money? I feel very confident telling you that you will make 2% of whatever amount you raise every year for as long as we're in the deal. So if we have a 5-year plan, right? Most of ours are a 5-year business plan. So if you raise $1 million, right? That's $40,000, or I'm sorry, $20,000. Do your math, Erin. $20,000 every year for 5 years. Everyone with me? Okay. It's going to get better. So you're not going to stop at 1. We're not looking for doing business transactional. We're looking to find people that have the deep connections, that are hungry, hardworking, are visionaries, are all about impact and working with great people. So check it out. Then all of a sudden you do number 2. Maybe it's 1.5 million. What if you could stay in the lane and you didn't have to go vet properties and get on calls with the property manager and work on your construction budgets and your variance reports and all the things that bog you down, that most syndicators are taking down like 2 properties a year. If you go really look to see what the big players and how many they're taking down, sometimes it's just 2 a year. What if you could stay in this lane and really just knock it out of the park, right? Guess what? Just like happened with me, somebody comes in and they jump in for $100,000. Then they jump in, next one is $300,000. And then they jump in the next one and guess what it is? A 1031 for $1 million. This is what happens in our space. If you work with the right players that are getting the results, guess what? You look really good for your investors. Who made you guys look good? Quattro. You just rode the train of Quattro. You rode the coattail of Quattro. We make you look really good. So guess what happens next? Who's ready to hear it? Give me the little, come on, like Erin, bring it more. What else you got? What else? Okay, so check this out. Everybody's good so far on what I'm sharing, right? You can see how it just creates a snowball effect massively. And I told you 2%. I feel very confident to tell you 2%, and it could go as high as 5% of whatever you earn. Conversation for another time. But if you just go off the 2% number, you can't go wrong. You're going to win in this space. Okay. So let me give a little bit of detail really quick. What stops somebody from going to just Erin or Quattro directly? Okay. Just hang with me for a moment. What happens is this. Let's just say that you have deep connections and all of a sudden it's a $10 million raise. And let's just, for sake of it, let's just say that you raised $5 million. Okay. If you raise $5 million, it puts you in the bargaining seat as a fund manager to go back to Quattro Capital and say, hey, look, I'm going to commit to raise half your money on this raise. Now you put me in the preferred position on that 5 million. Do you see what I'm saying?
Well, Erin, what do you mean by preferred position?
So you're the first to get paid the returns that come in from the cash flow for this particular property. Let's just say it's a 8% pref. Okay. You're going to get your $5 million. That $5 million is going to be treated in a pref position, and it's the first to get paid. Meaning if shit hits the fan and all of a sudden the thing like were to fail, guess who gets paid first? That pref position, your $5 million. Okay. So you have a little bit, sometimes it's a little bit higher return, which is what allows your fund to mirror the same returns as Quattro. Therefore, nobody's going to want to try and find a workaround to go to Quattro directly because you guys got a pref. Are you guys understanding this? Because I don't want to lose you. I really don't, because I'm going to.
Yes, that's exactly what Alicia asked here in the chat, right? She said versus the KP or GP in like versus the GP in this place, right? Which is the case. That's what the preferred return is.
Yeah. So it can be really, really powerful. Okay, guys, you ready for the next? And we can go into it at a later time. Happy to jump on one-on-one calls and help you guys get a better grip and an understanding on it too. Can I move on?
Of course.
Okay, cool. So what is the other thing that Quattro is doing right now? So that's our fund for multifamily. We also have created a fund that is a guaranteed return, and it's an income fund. That fund of ours pushes out and guarantees our investors 8%. It's basically like having a promissory note, and our investors can either come in and be in an equity position with one of our funds, or they can come in and just have a guaranteed return of 8% paid out quarterly, starts from day one. Everyone following so far? Good. So now with this 8%, that's all they're getting. There's no upside for them. But right now, people are hugely wanting to preserve and protect their money. There's not as much deals going on, and people want their money at play and not lost in the stock market. So how has this been powerful for me? It's been powerful because imagine for a moment, what if you get on a call with an investor and you're like, hey, I got this multifamily property. It's a double your money in 5 years, 18 to 20% return annually at time of exit. And then you're at the end of the call and you're like, hey, are you interested in joining forces on this deal? They may say yes. They may say, oh, I need to think about it to go ask my dog Spot and my brother Bob, right? They may say that. But imagine for a moment, they now, because I have my 8% guaranteed return, they now have an option, and people love options. So now my story with my talk track is, are you looking for upside where you put your money in and you have equity and you have upside in it? Or are you looking for a guaranteed return of 8%? 3 years, 3-year hold for the 8%, 5-year for the equity. Which one is most appealing to you? Wendy, which one's most appealing? And Wendy says, my gosh, I kind of like the idea of locking in my money and getting a guaranteed return, but I really like the upside. But hold on a second, Erin, would it be possible to take my 300,000 and I do half over here and half over here? Well, yeah, absolutely. You can do whatever you wish. People are more apt to tell you if you have a choice for them. If you have just one thing, they're just like, yeah, all right, I'll come back to you. But if you're like, you get to ask the closing question, which one do you like most? After you share the difference between the two, right? And that's how you can tell whether or not somebody is interested and they want to move forward and what really they're gravitating to. You guys hearing me? Pretty cool,
Yep.
right? Okay, well, now you're like, okay, Erin, tell me about WIFM. WIFM stands for what's in it for me. So you guys are saying the same thing. Well, what's in it for me? Tell me more about this. So I'm going to tell you right now. I just told you about fund. The fund that I just shared, you can become a fund manager. You can have the upside, you can have that. But imagine now if you did maybe 1 or 2 funds with Quattro, okay? And now all of a sudden you're like, well, hold on a second. I want to play just like Quattro is. I want to have my guaranteed fund where I just pay my people 8%. Why would somebody want to do that? And I forgot to mention why we're doing that, or why one would want to do that. Think about it. If there's going to be a lot of deal flow right now, and all of a sudden people are putting their money in something that's an 8% guaranteed. If you take down an apartment building and it's pushing out, call it 10% cash on cash, maybe by year 2. Well, guess what? If you can take other people's money, pay them a guaranteed 8%, and Quattro can go knock it out of the park like we have on the last 5 last year that we sold and make a 34%. Let's do the math. It's all about arbitrage. So if I can make a 30% and I have to pay 8%, 30 minus 8, it's 22%. So I can go and leverage and go make 22% on somebody else's money. I don't know. Like, come on, guys. Mic
That's
drop.
crazy.
Like, I don't know.
Mic drop. Mic drop. Fires in the chat. Zoom hand waves. All the above.
Yes. So imagine if that was just your stepping stone for you to get in, become a fund manager, get the clout that fund managers get, because when people hear you're a fund manager, they're like, holy crap, he's a player in the space. She's a player in the space. And then you mix that with a high performance team that you're linked up with, that's going to make you look really, really good. The party's over. It just opens up more doors for bigger and better. And that's where I said, after you've done a couple deals and you gained authority in the space, and now all of a sudden you have an option, you're like, well, to hell with this. I'm going to create a second fund and I'm going to do a debt fund. I'm going to go copy Quattro. Well, to hell, why not? Why not?
Why not?
And then you just take that debt fund and guess what you do with it? Now you come in and you write a $4 million or a $2 million or a $1 million check to Quattro in one of our deals as a limited partner, right? Because your fund money, literally that fund that you create, that checking account, now all of a sudden you're just going to write one big check to Quattro's fund. And you're coming in as just an investor, but with a heck of a lot of money, right? With your 10 investors or your 15 investors. You can do it where they have equity upside, but imagine if you were the one that wrote that check for $1 million and you only had to pay them 8%. And you took care of the whole upside.
Ooh la la.
Yeah. Awesome. Y'all are looking a little bit stunned. I'm not quite sure where your head's at. So let's pause for a sec.
Well, I think what's happening, Erin, is, when we have our our meetings where we met with you kind of one-on-one, right? And when you first dropped this on us, we had to like pick our jaw up off the floor. I think that's a little bit of what's happening right now. We're just trying to figure out. It's an eye opener, right? It's it's expanding our horizon, right? It's thinking bigger. Something that probably many of us maybe have never heard before, or just heard a little bit of it, but didn't know the magnitude and impact and power behind funds and how you can use them. So I do. Marcel, did you have something? I wanted to fire away a question here.
I think what's important, and this is a question we had, right, Trevor, is maybe before you fire yours, maybe it's the same one, is you, Erin, gave everybody now the outline also, how can I get started, in an inexpensive way, because usually starting a fund requires a lot of effort, a lot of capital in the beginning, right? So you gave them the framework, and now how can you do it in an efficient way? What does it look like? So let's say Iffy, I'm gonna call on Iffy now.
Let's go, Iffy.
Look at Iffy.
Yes.
And Iffy does exactly that, right? So now she has her fund, she's got the investor portal, she's got the accountant set up, the lawyer, everything is set up, right? What does Iffy do right then?
Oh, this is so good. Okay, we're ready. I'm going to drop some serious nuggets right now. Big time. Okay, so number one, you have got to have your people, i.e. your investors, locked and loaded. You are not going to go take your attorney. You're not going to go set up your attorney. You're not going to go do anything with the portal. You're not going to do anything with the CPA. You've got to first have something for your people to invest in. You hear me? I'm not going to tell you to go fork out money when we're not even ready to go. You don't even know what you're having the attorney create, right? So here's the thing. How many of you guys want the goods? Because I'm about to deliver the goods. And you guys can take this tonight or tomorrow and you can put it into action right away. You guys cannot go to your people that you're thinking that might want to invest in your deal last minute and be like, hey, you want to come jump in this deal? So I'm going to give you the 1, 2, 3. Okay. You cannot go to them and treat them like a hoe. You can't just come and like, you're like, oh, I got my deal. I'm gonna like, let me just go see if they want to jump in. Like nobody wants to be that person. Like it's kind of gross. Like you got to have some subtle little drips along the way that help them to get a taste of it. So let me share with you what that looks like. Your first one is, I'm gonna give you a chance right now. As a matter of fact, we've got right now a 200 Quattro Capital's got a 240 unit apartment in Houston, Texas. Literally, honest to God, we've got $350,000 left in this $17.2 million raise. Okay. I'm going to let you use this as part of this setup that we're going to walk through right now. Okay. So check this out. It's a good thing it's not closed because you're going to be able to use this to your benefit mightily. So what you're going to do is everybody, how many of you guys have a list of people that maybe want to invest? Like raise your hand if you have people that want to invest in the space, or you feel like they like you and they know you enough that if you had something great, they'd probably want to come alongside. Yes, 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 yes. Cool. So this is going to apply to all you guys. Alicia, you got to own that sucker. That was like a half-ass, like, yeah, kind of like own that puppy. Okay. So check this out. Here's what you're going to do. You're going to want to send out an email. It doesn't matter if it's 5 people, 10 people, 40 people. Okay. You're going to send out an email, and it's going to say something like this. Ken, we're going to use you. Hi, Sarah, it's Ken. Hope things are going well. I wanted to reach out because I've got something pretty exciting in the works right now. Last time we spoke, you shared that you have some interest in the multifamily space. I wanted to share this exciting opportunity that I've got in Houston, Texas. I've got a couple spots remaining. It's a 240 unit apartment building. It's double your money in 5 years. It's in one of the hottest markets of Houston, Texas. And we are super excited about this one. If you would like to jump on a call and hear a little bit more, I'd love to talk shop and see if perhaps your palate has a taste for it. Short and sweet. Did everybody hear that so far? We're going to stack. Okay. Something like that to your prospects, your people. Now, the likelihood of them even responding back in the next, guys, this is why I'm telling you, your opportunity is here. In the next 2 weeks, we're going to end up having this deal closed. Okay. So it's not even going to be available probably when they come back around. Now, they come back around in 2 weeks, my deal's closed, right? And you can always reach out to me and ask the question, is it closed? Because we never want to lie and we want to be forthright. Okay. Always, always. So you come back and you're like, oh, Greg or Ken sends a message to me. Erin, is that deal, is it still open? No, I'm sorry, it's closed. Ken then sends an email back to Bob. Hey, Bob, thanks so much for reaching out. My goodness, this was such an incredible deal. Unfortunately, those spots already got taken, but no worries. We've got something else in the works right now. We're in the middle of just starting the due diligence. If it checks all the boxes and meets the criteria that our team looks for, I'd love to circle back around if you would like for me to do such. In the subject line, put, yes, keep me in the know. Did everybody hear that? It was another, okay, that was if he responded. If nobody responds, guess what? It's okay. You did a little drip. That's what you guys got to do. You can't come be and use them like a whore the moment you really need something, right? So check it out. Now you reach out to Erin and you say, hey, Erin, is that deal really closed? Is there any more spots? And I said, hey, I'm so glad that you reached out to me. Rose, thanks for circling back around. It's full. Guess what? She now takes her 20-person list and she says, my goodness, Bill, my gosh, we've had so many people reach out in regards to the Houston deal. Super bummed, but unfortunately there's no more spots. But I wanted to circle back around with you because if you are interested in the future, I'd love to circle back, or I'd love to check back around as soon as we finish the due diligence on this next opportunity or next project that we're working on. Would you like for me to do so? Some will, some won't. So what? Who's next? Did you some will, some won't. So what? Who's next? Do you hear me? Don't let your feelings get hurt. You've got to start someplace. So I just gave you my property to work on. You're not saying a lick about Quattro Capital. You're not giving the business webinar. You're not giving them a 40-page anything. Did I lose you? You still there? Do you understand what
Still
I'm
there.
saying? Sorry.
Still there.
So here's the thing. You don't have to give them anything except for a few bullet points about the deal to see if you can pique their interest. I gave you the script. You don't have to deviate. It's worked hundreds of times already for other people. Don't make it more difficult. I literally just gave you the script. And if you're thinking about continuing in this space, you've got to do little drips like that anyways, regardless whether or not you're looking to do a fund or you're not doing a fund.
Yep.
Right? The only reason I told you about the fund is because it is truly the lowest hanging fruit if you're wanting to get in the game yesterday and not be the 18-month wait. You know what I mean? Like I had.
Yep.
And I know that's what a lot of people struggle with, right? And I know we had this conversation amongst the team is exactly that, right? How long can I stay consistent, motivated, disciplined, you know, to keep fighting at that one goal? And
yeah,
we reiterate that every single time here when the celebrity guest says how long it took him or her for the first deal. And kid you not, Erin, your 18 months is not a one-time thing. I would almost say it's the norm. It's exactly the norm.
right. But that's a long time. So what if there was a way to speed it up?
Yeah.
It's
That's
either
right.
it's either the fun thing or it's getting in somebody else's team. I'm sorry, getting in someone else's deal as an investor to open up the doors for you. And I feel like as soon as you get in a deal, you can speak from a totally different place, which go back to part one and you'll hear as to why I say that.
That's right.
That's right. Let's sure you have one question. Let's do this. We go to your question. If it wasn't the same that I asked, because I knew exactly that was the answer Erin had, because we asked that question, and then we go into a Q&A because I feel like people have questions.
Yeah, there's probably a lot of questions from the audience for sure. Man, I mean, I got a lot of questions for sure. I think, Erin, it'd be helpful for everyone because if they're like us, and I'll say us, me, Marcel, and Victor, right? We're still trying to understand funds and get our heads wrapped around funds. And where we mostly our understanding comes from, you know, when it talks about raising for multifamily deals is the syndication structure, right? So could you elaborate just a little bit on the main differences between the fund and its role in a multifamily deal versus a syndication type structure for a multifamily deal? I think that'd be helpful for everybody.
Yeah. So as far as the structure goes, you're with a fund, you're going to have the fund created. And I'm going to break down just a few things. So if there are 10 investors, the 10 investors' funds go into the LLC bank account. I want to be very clear on this. And I know it sounds like elementary, but I want to make sure you understand. The investors still are going to come in and sign a PPM. There's always going to be a private placement memorandum signed for the fund. I'm going to keep this easy. For us, we're only doing 1 or 2 multifamilies in our first fund. For ease of things, I'm going to tell you we're doing 1 property in our fund. Why are we doing that? Well, I don't need to go there. But anyway, so your fund is going to have everybody write their checks in there. And then if this is Trevor's fund, Trevor's going to write 1 check to the LLC fund that owns the property. Does everyone understand that part? Okay, we're keeping that super simple. With a fund, you are not getting on, as I shared and elaborated, you're not getting on weekly calls with the property manager. You're not going out and touring the property. You're not going out and doing the due diligence. And please understand when I say this, I'm speaking high level. Of course, you're going to look at the numbers of the property and you're going to watch the business webinar because you always want to make sure that you're investing with a great group, but you're also feel confident about the numbers in the area. So if you wanted to go out and check out the property, sure, you could absolutely do that. I'm just trying to stay high level with it, that you truly, your main goal is to stay tight and deep with your connections and link them to great properties that are ran by great operators. When you look at the multifamily space in general, I hate to say it, but there's not a lot of great operators. And I say this to you because of what's happening in our space. People are not, how do I say it? Like for me, Quattro, there's 5 of us. Every single time we take down a deal, there's 5 of us. There's a lot of people out there in this space that are capital raisers, and there's like 25 capital raisers, and then there's different general partners, and then those 5 general partners, every time they take down a deal, it's different general partners. So there's not continuity, and your investors are going to want a solid team that has a track record that's worked together time and time again on a property after property after property. Does that make sense?
Yep.
Okay, cool. So now when we go over to the syndication side, the syndication structure is that GP LP. Okay. And when you have the GP, the LP, your fund comes in as an LP investor. They are not being compensated or treated like a GP. Very clear. We want to have this very clear. The compensation for the fund manager is paid out at the fund level. Does everyone understand that? So we don't have to, like, it's too much to dive into how everyone's getting paid. That's why I went high level with that 2% to 5%. Conversation for another time. We could get way lost in the weeds, but we'll just keep it there. So in the syndication, we have the GP and the LP, and then all the roles that come with the GP of taking down a property that everybody has heard of, right? Of vetting the property, getting the loans, signing on as the guarantor, all the banks, all the funding, everything, right? You're not getting lost in that sauce. You're staying deep to your connections and coming in as an investor, having vetted the property up front, and then you're on to the next property. I don't want to be haphazard about it, because obviously you want to have oversight and so on and so forth, but check it out. When Quattro Capital's quarterly report goes to their investors, who's the investor? Your fund. So your fund gets that, your fund, meaning you, Jerry, if it's you, you're going to receive that in Jerry's email. Well, then guess what Jerry does? He just takes that whole update, rebrands it with his logo, pops it into his investor portal, and it goes out to your update to all your people. Do you see what I'm saying?
Yep.
It's pretty powerful. So I know not an hour, we can't discuss all of it and really break it all down. I'm trying to give you high level so you can absorb, chew on it, and be able to digest it a little bit.
Perfect.
Get activated on it.
Yeah. So
I love it.
I figure for us, if we can have 10 good, solid soldiers that have deep connections and are raising the money, what does that mean? It means now we have a lot of powder. It means that you guys are really just testing the market, seeing if you have the people. And now you get to have, call it 10 people, and Nancy raises $1 million, Rose raises $1 million, Iffy raises $1 million, Fred raises $1 million, and now I just got 4 million of my 10 million from 4 people. Because guess what that does? Now the powder's there, the powder's available, and what happens to Team Quattro? We already know that you guys are going to help us with the big nut of it, so we're on to the next property. And guess what? Rose goes, my hell, I just did $1 million. To hell with that, man. I'm going over to the dentist office. I'm going to go get another $1 million. She's on to the next deal with Team Quattro, and maybe the next deal with Team Quattro. I don't know. Do you understand what I'm saying? It helps you just to make massive headway. And by me, Quattro, linking arms with other fund managers that can create and have the powder available, it helps us go hit multiple properties because we only have that 2-year window.
Yep.
That 2-year window where there's going to be a lot of properties lost and we want to be there to pick up. And the only way to do it is to fly higher together.
That's right.
Yeah.
Let's fly high. The following, I can't move too sudden because my headphones are wonky. So we have 15 minutes, 40 minutes at this point for questions, but you know how we roll. We always want to share some value back to our celebrity guests as well. So in this case, get your cell phones out real quick, because we want to share on social media that we thank you, Erin, for coming on a Sunday night to share all this with us, get us excited, activated, and educated, right? So here's your chance, guys. Let's get the phone out. Here's mine. Let's do the Zoom wave. How about that? All together. Let's do the Zoom wave. Here we go. I see some. Yeah, let's do some more here. Elise, come on. I don't see a Zoom wave. There you go. All righty. Love it. Perfect. You should have that picture. And Caleb is throwing in here in just a second again the tag. So make sure you tag Erin, feel free to tag us. We share it and let everybody know how much of a great time we had and how much they have missed. Boom. No, just kidding. But also get known out there, and then know that people can also rewatch this obviously later on the YouTube channel. So I'll post mine here in 20 minutes when we're off. Feel free to post yours as well, and make sure you tag Erin in that. That's priority. All right, let's go into the Q&A. What do you think, guys?
Let's rock it.
Let's rock it. And Andrea was very smart. She immediately raised the hand before anybody said you need to raise your hand. So that's very, very smart. That's why Andrea is first. That's why she's first. Andrea, stage is yours.
Hey, Erin, thank you so much for coming on and sharing your super golden nuggets of knowledge. I mean, I'm in awe of you as a woman and just everything you do, because I also do marathon running as well. And it's like finding time for all these things, you know, it's a balancing act. So I wanted to ask this question coming from a newbie standpoint. Even though I've been in real estate for over 6 years, I've been in multifamily investing. I'm the operator. And as a newbie coming into starting a fund, sometimes I will say this, you know, growing up Hispanic with really no money, and then getting out of your circle of comfort and starting to get to know these high net worth individuals, what are the skills that you recommend somebody starting out wanting to have a fund should have? Should they know how to maybe have a digital business card, or maybe go to events, or maybe keep track, like, or I'm just wondering, like, what skill set do you feel like you've had to develop as a fundraiser and a fund manager?
Yeah, no, I love that you're asking that. I think that it becomes a little bit more easy for myself because I feel like I'm just such a people person, and I truly, truly have a desire to help other people win. And so I think first and foremost is, let's just go with the basics. Give me 1 second. I'm so sorry. My little one's calling me. Let's go over the basics, guys. I actually just did a recording for our company, which is going to come out here shortly. And I suggest you listen to it. There were some gold nuggets about when you are in groups and when you go to conferences and when there's large groups and meetups and things that you go to. There's things that you can do that are really, really powerful to really better position yourself. So when I say go back to the basics, let's talk about it. How many times have you guys gone to an event where you see people and they look like their dog died, or that they just had a taste of a lemon or took a bite of a lemon? And you're like, dude, could you just smile? Like, you're sucking the life out of me. You're not putting your A game, right? So you will stand out in a group if you just put a freaking smile on. Like, smile, raise your vibration a little bit, stand tall, have better posture, actually look approachable, smile even if nobody's talking to you, because the likelihood of somebody walking up and starting a conversation is probably pretty high, right? And then I think always, I think that you meet people just in general, and as humans, some of us are just really quick to talk about how great we are and all the things about us. What if you just turned it and you made the conversation about the other person? He who asks the most questions wins. And the other thing I would tell you is, when you're having conversations with these people or whoever it may be, start to find out, hey, as cheesy as this sounds, guys, and I know Trevor and Marcel have heard me say this to them, how can I serve you? How can I serve you? What are you in need of? Who can I connect you to? How can I help you move your needle forward? You guys, these are things that I say on the daily, like multiple, like I'm getting chills because it feels so good when somebody asks me that. So all I'm doing is just asking same things that make me feel good. I ask to other people. I'm not saying, hey, can you help me do this? Can you give me this? Can you do that? Like, oh, like, what if you just changed it a bit and made it about the other person? I can promise you this. I don't know. Well, let's just pause for a second. Let's ask Marcel and let's ask Trevor. When I said, and I've asked you these things, how does it, like, what's your take?
I mean, I feel honored coming from you, honestly, that you would ask that question. And it's an opportunity to be seized, which, coming from you, somebody of your caliber doesn't quite happen every day. So it's an extremely special moment, makes us feel very special as well.
Yeah, no, for sure. So thank you, Trevor, for sharing that. But honestly, guess what that does? It raises your value of who you are. And people want to be around valuable, game-changing individuals that are dynamite, that smile, that actually are positive, that are looking to up level, that are looking for growth, that give a rip about other people. That what I just shared with you will totally up your game. You will become magnetic in a way that's unexplainable because you're different than the masses. He just told you, most people don't ask those kind of things. Listen, as I shared probably 10 times already on this call today, we are better together. We're not meant to run the show by ourselves. And it's boring when you're doing it by yourselves. But if you can help other people win, guess what? It's like the law of reciprocity. If I help you get what you need, I'll get what I need. And naturally, you have a desire to want to somehow, some way help me. And here's the best part. If you're on a Zoom call with somebody and you're having this connection and you're like, hey, how can I serve you? What are you looking for? And then you just shut up and you let them talk. And guess what they say back? Law of reciprocity. Man, Erin, I'm so glad you asked that question. I'd love for this, this, and this. Fantastic. Let me take note on that. I'll be sure to send that over. Yeah, I'll be sure to get that over to you. And they say, thanks for asking. What can I do for you?
Yep.
You want to know what I've been saying lately? What's been so freaking powerful? I'm a part of a couple really highfalutin masterminds. One of them in particular where I'm a little bit newer, and it's a group of 200 people. This is such a great tip, guys. Get ready. 200 people. I'm new to this mastermind. And what I said to these individuals that I connected with, I said, I'm new to this group. Who are the 5 most pivotal people that you've met in this mastermind that you could connect me to? They don't have to be in the same space as me. I don't need them to be in multifamily. I'm looking to be around game changers that are doing bigger and better things. And I'm always looking for growth. And that's what I tell them. You wouldn't believe what's happened. I've gotten introductions to crazy, wild people that are far bigger and better than me. But then here's the thing. If I say that to the 10 people I met, listen, guys, if I said that and I asked that question to 10 people and I say, introduce me to the 5 most pivotal people in this mastermind, do you think there's some crossover?
For sure.
So now all of a sudden these big wigs are reaching out to me and saying, hey, I've heard your name a couple times. It sounds like we need to get on a call. And when I say this, I'm not kidding. What is it? Formula One? I don't even know what that is. If race car, one of the guys happened to be going to have dinner with the Formula One family and had raised $158 million in 9 months. And I was on a call with him. Guess what happened from there? I shouldn't tell you guys this, but he didn't want to come onto the Zoom call. I want you to hear this. He didn't want to come onto the Zoom call initially. I said, hey, are you going to turn on your camera? This is my first time meeting him. He goes, I would, but I got my little one in my lap right now. I said, it's okay. It's a family business, brother. He turns on his camera. He's got his little 1-year-old, like, I don't know, 10-month-old, something along those lines, and puts the baby on. And we ended up, our call wasn't 15 minutes. It ended up going over an hour. I got done at the end of the call and I said, hey, would you mind if I take a picture of us on Zoom? And he goes, no problem. I said, would you be offended would you be okay if I actually put it on social media? He goes, no, go right ahead. I put it on social media, but before we got off that call, guess what he says to me? What are you currently working on? And I tell him, we just won this deal in North Carolina, $40 million deal. What did I do? I took the attention off me and I asked him a question right away. Why? Because I didn't want to keep talking about me. That's not what I wasn't here to make the ask for his money. So I flipped it, asked him something about the baby, because I knew that the baby, it's your own kid. You love your kids, right? So I asked him something about the baby, changed the script. What did I do? I went and posted that on Facebook or LinkedIn or all of the channels. He literally sends me a message in the Slack channel and says, hey, I saw you had my baby right in the forefront on social media. hey, can we get on a call next week? I'd love to talk about how we can take your $40 million deal across the finish line.
Let's go.
Y'all just hear that? He met with the Formula One family, raised 150 some odd million dollars, and I think it was 6 months. And he didn't say anything about us working together. We didn't even have that conversation. We were getting to know each other. So don't be so quick to start just being an amateur asking for people's money or for them to invest with you. This is a place and space where people want to know that they're loved, important, and special, and that you value relationships. And if you lead with love and truly wanting to help other people, guess what? If they're of same caliber, they're going to want to do the same for you.
Absolutely.
So imagine that. So anyways, we're still going to get on a call, but is that not awesome? I hope y'all are learning what some of the tips and tricks that I'm just throwing down that are truly embody who I am as a person, and it's to help others. And you will always win if you help others. It's such an easy game, and people make it so damn ass difficult. It doesn't have to be. Just don't be the amateur that sits there and asks for people's money. Or do you want to invest with me?
Yep.
Right? Anyhow.
So good.
That was, whew.
We just got a little capital raise 101 class right there. Andrea, with your question, Erin, that was super solid. What's our time? Okay, we still got a little bit of time left. There we go, Marcel. I see you.
Yeah. All right.
Well done. Well done.
Question. I know I've gotten you guys close to the end here.
We got a couple more hands raised here. Let's see. Let's bring Alicia on. I believe she raised her hand next here. All right, Alicia, I just asked you to unmute. There we go. Perfect.
All right. Thank you so much for all the value you've provided, all of you, really. I'm kind of getting back into this space, long story, but my question relating the capital raising is what would you recommend for someone just getting started with no like X Capital LLC? I mean, I have an LLC for something else, but I don't have one specific to capital raising.
So you're looking to raise capital? Wait,
Yeah.
like for somebody else's deal, or how are you? Can you give me a little bit more context?
Like as a fund manager, for example.
Okay, so you're not going to, first and foremost, you've got to get a feel for who are your soft commit people. That's what we're trying to get, guys, is those soft commits. That's why I was telling you to follow that script, because if you can get the soft commits and you find out that you've got 10 people that are each going to invest $100,000, that's $1 million right there. So if you drip a couple of properties and there's just a couple spots left, or you have a friend that's got a couple spots left in her deal, use all of her little highlights to at least like drip. You've got to be dripping along the way before you go in and ask and go in for the kill. You hear what I'm saying with that? So you don't need to have an LLC, sweetheart. You just need to get your commits and figure out who is ready and willing and wants to come join the party, right? And then once Quattro says, okay, we finished our due diligence, we're moving forward on this North Carolina deal, it's a done deal. Let's go, lock and load. Alicia, you want to work with me? Fred, you want to work with me? Andrea, like, want to work with me? I'm looking for deadly serious, not curious people. By that time, y'all have I just gave you guys the script to go find out how much you can get in soft commits so that you can come to the party feeling confident, locked and loaded. But I'm not going to come to you and be like, okay, have you been working on your people? Like, how many people have you got that have garnished, and have interest in linking up with you? I don't know. Maybe Fred says 25. Fantastic. Let's go. Party, game on. You want to at least be able to get, I really like you to get to $1 million. You could do it with $500,000, but I just don't recommend it because it's not as fruitful for you, right? And I want this to be successful and I want you to enjoy it. So I really highly recommend getting to $1 million. You guys, the first one is always the hardest. After the first deal, the party's over, man. It's going to start rolling and flowing just like it does for me in the multifamily space where our minimum is $100,000. Do we make a case by case exception for a little less on a side conversation? Yeah, 50,000, but that 100,000 is the first check that they give us. And then all of a sudden it turns into $1 million like that within 2 years, because now they're taking 1031 from another deal because they've had a great experience. They love the updates. They love the team. And now they don't want to leave you. So I'll say this much too, is like, you guys, we're in the greatest space ever. If you take care of your people the right way and you exceed the expectations and you give them the returns and walk out that business plan with success, you will have lifers. You will have lifetimers. They will never leave you. They're just going to want to continue doubling their money with you every 5 years. You've just got to do it right out of the gate.
Boom.
So,
Beautiful.
Alicia, you're good. Just go start working on your people, get your list. And then once we have that property that we're going to take down and Alicia says, I've got it. I've got 20 investors that are coming to the table. Guess what? Number one, they don't have to be accredited, you guys. Most people that have a fund, I forgot to tell you this, have to have only accredited investors. We are all for impact of the person that is not an accredited investor because we want to be able to help the masses get them in the game, which means you guys don't have to have accredited investors for your fund. That's very unique, just so you know. Most are accredited investors only.
I love it. This is always what happens, by the way, Erin, right? It's like it takes one person to ask a question and another to raise the hand until others then feel encouraged to also raise their hand. And then we're always running out of time. So right now you only have 1 minute, but I want to make sure that you get to share your question.
That's right.
Go, Ray. It looks like it froze, maybe. Okay.
There he is.
No,
There he is.
I'm here. I'm still alive. I'm
There you go,
moving.
Ray.
Hey, how
Hi,
are you?
Ray.
Yeah, thank you. Thank you for your passion and enthusiasm to share this information. I can really see you cannot really hide the passion behind your your your
Thank you. I
talk.
appreciate
So
that.
I think you probably just mentioned probably answer my question at the end of your last talk, because you said if I'm the fund manager, so my investors doesn't have to be credit investor, right?
Nope, that's the most beautiful part, because almost every fund out there, you have to be accredited, not with ours. On
Okay.
purpose. On purpose. Yeah.
Okay, I think because that is my confusion, because if for one, for example, for one fund, you need like a 15,000 to put ahead to set up the fund for everything, right? The portal, attorney, everything.
Yeah, I don't want to confuse you, but it's
But
5.
if that 15,000 I can use to do the investment, why we spend that $15,000 if I have like a 20 accredited investor? They can just invest as an individual investor to your deal, right? They don't have to come to a fund, join me as a fund, right?
Yeah, no, they don't have to, but if you're wanting to be compensated as the person that put that for bringing those people to the table, we can't pay you for bringing money to our deal or bringing your investors to our deal. So if you want to bring them out of the kindness of your heart, sure, please have at it, right? But if you want to be paid and compensated, then it would have to be through the fund way. And then second of all, for anybody that's in this place and you're like, holy smokes, yes, please, I want to find a way to link arms. Fantastic. But if you're in the place and space and you can invest as an investor alongside of Quattro Capital in a deal, that is even better. Whether it's us, Quattro Capital, or maybe you're going to create a fund and go work with another high performance team that has a great track record, try if you can. It's going to always be better if you can go in as an investor with them beforehand, because then you can say to your investors, this is a true, tried, tested, top-notch group that I've already invested with. You become in a power position. You don't have to. It's just really helpful, if that makes sense.
So as you said, the minimum for a fund manager is the 1 million, or?
Yeah, 1 million, I would say, would be the amount that you want to hit for sure. And what I was going to tell you really quick, I'm sorry, I know we're going over, Trevor, is that you're going to pay up front the attorney fee of the 5,000. The other 10,000 is going to be paid out monthly. Beautiful is that? That's pretty awesome.
Pretty
So
awesome.
by the way, we don't make money. Quattro does not make money. All I did is negotiated the shit out of all these contracts with all of these different vendors that we've used. Part of my mouth. I'm super excited. But, and I said, please, can you put them on a monthly plan so that they don't have to cough it up front? And guess what? that $10,000, believe it or not, is going to get paid out from your fund anyways. You're not going to be paying for those fees yourself. So anyways, conversation.
So fire.
Boom.
So fire.
I have a last question. So
Ray,
what
Ray,
is the-
sorry, brother. We got to cut it off here, man. We got to cut it off.
Okay,
Drop it in the Facebook chat. All good.
Yeah.
Your question was fantastic. We just got to keep our time. We
But
appreciate
put
you.
it- I encourage everyone, throw that stuff in the Facebook group and we'll always make sure everything gets answered. Promise.
Definitely.
Okay, Erin,
Yes.
Trevor, for that. Trevor always farewells our guests so well.
I mean, it's hard to come up with the words, Erin, honestly, to do an adequate farewell to give it justice of what you've done in round 1 and round 2 and the value that you pumped in to the Freedom Chasers community. I would say everybody put some fires in the chat, put some gems, put those little gold bags, put some money deals with some wings on them, anything related to that. Just to send love Erin's way and Quattro Capital as well. Just a fantastic group. Erin, thank you so much. We greatly appreciate you. I think this blasted all of our horizons just wide open to think bigger and realize what we can really do leveraging the resource of funds. So thank you so much for being a great example. Thank you so much for being an inspiration. And this is not the end of Erin Hudson, Quattro Capital, and the Multifamily Freedom Chasers.
That's right. You guys have a good one. Thanks so much for having me. I appreciate you guys.